Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 25th of September 2020, and this is the daily report for gold and silver, our weekend review, and what a week we have seen. Tremendous drawdowns in both gold and silver, with silver exhibiting double-digit collectively in terms of its percentage drawdown throughout the week, and gold losing almost $100 on the week. That is the primary reason that we have remained flat with no active trades as we go into the weekend. There's no doubt technical damage began on Monday, and we'll show that to you when we pull up our charts. But first, to the price board. This was certainly an awakening and hard week for gold and silver bulls, with the precious yellow metal losing almost a full $100 in a single week of trading. And it ended the week on a down note, trading down by $12.60, with gold futures basis the most active December contract, currently at $1,864.30. Silver has been declining in double digits through the week collectively. Today's losing just under 1%, 21-cent decline, and currently fixed at $22.98. And dollar strength did play a role today. As you can see, dollar index up about 0.25%, 94.64, but considering that gold is down 0.67% and silver is down 0.91%, the vast majority of today's decline can be directly attributable to two things: a stronger dollar and a proclivity to sell that market, as we did have a solid up day in U.S. equities. Dow Jones Industrial Average gained 358 points. Standard & Poor's gained about 1.6%. And the NASDAQ also had a strong showing on the day. Let's take a look at our current technical studies. This week was certainly an eye-opener for gold and silver bulls, witnessing a dramatic decline in both precious metals. We are looking at a daily chart of gold, and the one thing that you'll notice immediately is what I was labeling as the former level of support, I believe has now become resistance. After breaking below a key and critical area, and that occurred immediately on Monday of this week, when market forces took gold pricing from approximately 1957 and closed in a single day down around the low 1900s, 1909, 1910. That followed with 3 days of consecutive lower lows up until today, and although we had a higher low on the day, we certainly closed lower by the tune of $12.60. What that tells me is now 1900 as well as 1919 have now become resistance areas. The other thing on a technical basis that I'm looking at is activity we've seen recently with a series of lower highs, and that certainly doesn't beckon well for those looking for gold to ascend to higher pricing. We've also had a series of lower lows when we take a look at the activity this week as well as last week's dramatic decline in both gold and silver pricing. When we look at gold, we can see that not only did Monday's action take us through the 50-day moving average, but the last 2 days have become very close to breaking through the 100-day moving average. That is currently fixed at 1848. The market is at 1864, so it is literally under $20 away from that price point. And the question is whether or not gold can hold its price point above this respective moving average. The importance of this particular price area is twofold. First of all, as we've talked about, the 100-day moving average is something that technical traders watch to gauge interim market sentiment. The 38.2% retracement aligns with that almost exactly, being roughly $4 apart. 1844.90, 1848.40 are the collective numbers. In the same way that we saw a confluence of the 50-day moving average and the 23.6% Fibonacci retracement. That came in at 1938. 1946 is the 50-day moving average. When you get two technical indicators that are valued as highly as moving averages and Fibonacci retracement coming to the same price point, we call that confluence, and confluence strengthens the importance of that particular price area. And traders, lastly, when we view price action this week in gold through the eyes of a weekly candlestick chart, which I have just put up on the board, you can see that we had a tremendous breakout, but that breakout was to the downside as gold reached the apex of this pennant formation or compression triangle this week and declined roughly $100. And that is also the reason why we have maintained a neutral stance with no active trades in gold or silver throughout the week. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for the next daily update and review. Bye-bye.